Good morning. I'm Peter Milios from the Finance News Network. US stocks tumbled overnight to close out a losing month after higher than expected wage data, raising new inflation concerns ahead of the Federal Reserve's rate decision on Wednesday. The Labor Department has stated that the Employment Cost Index, a measure of wages and benefits, grew 1.2% in the first quarter of the year, above the 1% consensus estimate. While markets forecasts suggest no alteration in the rate, there's anticipation for a hawkish stance from Chairman Jerome Powell. The S&P 500 dropped 1.57%, the Dow Jones closed 1.49% lower, and the Nasdaq finished the day 2.04% lower. Despite the April setback, the S&P 500 is still up more than 20% from its low last October, as investors bet the economy would withstand higher rates and piled into artificial intelligence plays like Nvidia. Data in the past month raised questions about whether stubborn inflation was weakening the economy while keeping the Fed in a restrictive mode. McDonald's, in its quarterly report on Tuesday, warned about a more selective consumer due to higher prices. Nvidia traded in the red on Tuesday, losing 1.5% in the session and falling 4% this month. The favorite AI play of investors was up for 5 months straight before this month. After the bell, Amazon reported better than expected earnings and revenue for the first quarter, with profit more than tripling, driven by significant growth in advertising and cloud computing, leading to a surge in stock value during extended trading. The results showcase the company's continued focus on efficiency and profitability amidst ongoing cost-cutting measures. Following the Fed's decision, investors will next need to grapple with the April jobs report on Friday. Turning to US sectors, all closed in the red. Healthcare recorded the fewest losses, whilst energy was the worst performer of the bunch, tumbling nearly 3%. Looking ahead to the Australian landscape, the SPI futures are pointing to a 1.2% fall. Thank you for listening.